How's it going, everybody? This is BeatTheBush. Most people who pay a mortgage enjoys a mortgage interest deduction from their income. That is, whatever amount you pay in mortgage interest and also property tax gets subtracted from your actual income. So that portion of it, you don't actually have to pay taxes on. It may seem like you're saving thousands of dollars of taxes, but at the end of the day, you're still spending 3 times as much on the mortgage interest. Let me show you what I mean by this. As an example, let's say you have a $250,000 mortgage at a 4% APR. Initially, the first year of interest you have to pay is about $10,000, and as you pay it, it gets lower and lower. Let's say you make $50,000, the $10,000 of interest gets subtracted off your income, so you no longer pay taxes on that. You have about $40,000 left in your income, and let's say you're in the 25% tax bracket. That means you pay roughly $10,000 of taxes. Now the total amount reduced from your gross income is the amount of taxes that you paid and also the $10,000 to the bank, which equals $20,000 that came out of your pocket. However, if you don't have a mortgage loan at all, you still have that $50,000. Yes, you do pay more taxes because if you pay 25% of taxes, you end up paying $12,500 in taxes, which is a bit more than the $10,000 here. That's why when you bring on a mortgage, you used to pay $12,500 of taxes and then suddenly it got lower. You only have to pay $10,000. So it seems like you're saving $2,500 of money actually. However, when you look at the net outflow from your income, it's actually $12,500 over here and actually $20,000 over here when you have a mortgage. So you're actually spending $7,500 more in the form of the mortgage interest. So yes, in this instant, you pay the government less. However, more of it actually goes to the banks instead. This is just a way to look at your mortgage, that it's not actually saving you money, it's actually making you spend more money. Now you might argue the principal amount that you put in your mortgage plus the interest is probably worth it. This really depends if your property appreciates by at least that amount every single year. Because when you have the mortgage, you actually have somewhere to live and you get a chance that the property might actually appreciate. And this appreciation might actually be way more than the $7,500 that you pay in interest. So let's say your property value is actually $250,000. Let's ignore the down payment and stuff right now. Let's say it increases 3% in 1 year, which is pretty reasonable for property value. Then right there, you made back the $7,500 that you spent in interest. So this is just a way to look at the mortgage interest as not in something that actually earns you money, but actually you're spending money. I bring this up because most people, when they look at the deduction and they go, oh yeah, you know, having a mortgage interest deduction is really, really great. But no, you're actually spending way more per year than a person that doesn't have the interest. Before you comment and say how good it is to actually own a place and actually pay mortgage, know that what I just described is just on the paying side of it. It's just a way to look at how much you actually pay rather than just looking at the deductions. Don't forget to give me a like on this video, comment down below, let me know what you think of this perspective that you're actually spending money when you pay on your mortgage interest. If you're interested in supporting this channel, I have an Audible link down in the video description below where you can get a free audiobook. I have a Patreon over here, and don't forget to subscribe. Thanks for watching.